You know, for every self-employed person in the UK, there's this constant countdown running in the background. It's not set by your clients, but by HMRC. And believe me, you do not want to miss a beat. So you've done it. You've taken the leap. You're your own boss now, building something amazing as a freelancer or a new business owner. It's brilliant. It's freeing. And yeah, it comes with a whole new rulebook. And right from the get-go, there's a deadline on the horizon. It's probably one of the very first and most important dates you need to circle in your brand new business calendar. And there it is, the 5th of October. This date is basically the starting pistol for your entire self-assessment journey. So what does this date, and all the others that follow, actually mean for you and your business? Well, let's dive in. To help us get our heads around all this, we've teamed up with the absolute experts at My Tax Accountant. They've helped us map out the entire timeline, so you can stop worrying about tax and focus on what you actually do best, running your business.
Right, let's start at the very beginning. It's a very good place to start. Before you can even think about filing a return or paying any tax, you have to officially tell HMRC that you exist as a sole trader. This is the registration process.
That is a fantastic question, and the answer is actually really specific. It's not just about when you feel like a business. It's about hitting some very clear financial markers. So, the main trigger for most people is that £1,000 trading allowance. If your gross income from all your self-employed work goes over $1,000 in a tax year, you have to register. The same goes if you're earning money as a landlord, you're in a business partnership, or you've got any other income where tax hasn't been taken off. Cross any of those lines and you are legally required to get on HMRC's radar. Okay, before we go any further, we have to get one really fundamental thing straight: the UK tax year. It's a bit quirky. It doesn't run from January to December. Instead, it goes from the 6th of April all the way to the 5th of April the following year. Every single deadline we're talking about today is based on this time frame. We'll be focusing on the tax year that ends on the 5th of April 2026. This timeline makes it crystal clear. So you work and earn money throughout the 2025 to 26 tax year. As soon as that year clicks over on April 5th, 2026, a new clock starts ticking. You then have until October 5th of that same year, 2026, to get registered for the income you just finished earning. Now, this little quote here clears up something that confuses so many people. The deadline isn't in the tax year you start trading, but the one after. So if you start your business anytime in the 2025-26 tax year, your registration deadline is October 5th, 2026, which is in the next tax year. Simple when you see it like that, right? Okay, here is a massive pro tip from the experts at My Tax Accountant. Do not wait until October. The moment you start trading, just get it done, register with HMRC. It saves you all that last-minute panic, and it means you'll get your unique taxpayer reference, your UTR number, well ahead of time. And trust me, you literally cannot file your tax return without it. Okay, so you're registered, you've got your UTR number. Phew. So what's next? Well, now we move on to the main event: actually filing your tax return and letting HMRC know what you've earned and what your business expenses were. Now, you've got two ways to do this. You can go old school with a paper return, but the deadline for that is super early, October 31st. The other way, the one HMRC really wants you to use, is online. And for that, you get an extra 3 months, all the way to January 31st. Honestly, filing online is a no-brainer. It's faster, it does the tax math for you, and you get an instant confirmation it's been received. But, and this is a very big but, that January 31st deadline isn't as simple as it looks. It's a massive tripwire for so many newly self-employed people, because it's not just one deadline we're talking about. This brings us to probably the most crucial, and definitely the most misunderstood, part of the entire tax calendar. So let's take a moment and break down exactly what has to happen on that final, frantic day in January. Yep, you heard that right. 3. There are 3 totally separate things you need to do, all on the very same day. And getting this wrong is what causes all those surprise bills and, of course, those dreaded penalties. So let's be absolutely clear. By midnight on January 31st, 2027, you must file your online return for the 2025/26 tax year. You also have to pay the tax you owe for that year, and here's the killer that catches everyone out, you also have to pay your first installment towards the next tax year's bill. And that is the question that literally echoes in the minds of every single new business owner. A payment on what now? It catches so many people by surprise in their first year. What on earth is this extra payment? Okay, put simply, HMRC doesn't like waiting a whole year for its tax money. So if your tax bill is more than £1,000, they ask you to pay an estimate of your next year's bill in advance, split into two handy chunks. And that estimate is based entirely on the tax you owed for the previous year.
Let's make this real. Let's talk about Ben. He's a freelance web developer based in London, and he's had a pretty decent year. After he files his tax return, his final tax bill for the year that ended on April 5th, 2026, comes out to a nice, round £4,000. So check this out. Because Ben's bill is over £1,000, he has to make these payments on account. Each one is exactly 50% of his previous bill. So on January 31st, 2027, Ben has to pay his £4,000 tax bill, plus his first payment on account of £2,000. That's a whopping £6,000 in one day. The second £2,000 is then due a few months later.
I know. That's a lot to take in, and a big hit to the bank account if you're not expecting it. But understanding this is absolutely vital for your cash flow. Right. Now let's put all of these deeds together and look at the full calendar for the year.
Okay, time to zoom out and see the bigger picture. When you see the whole cycle laid out on a single timeline like this, it all starts to make a lot more sense. And here it is, your master calendar. October 5th to register, a quick deadline on October 31st for those paper returns, then the big one, January 31st for your online return, your main tax payment, and that first payment on account. And finally, July 31st is when that second payment on account is due, which completes the set for that year. And here it is, quite possibly the most valuable piece of advice in this entire guide. Listen up. Even though your deadline is January 31st, you can actually file your return anytime after the tax year ends on April 5th. Imagine filing it in May. You will know your exact tax bill a full 9 months early. This is an absolute game changer for budgeting and removes all that stress and guesswork. So we've covered the what and the when. Now for the really important bit, the how. How do you make sure you can navigate all of this confidently without any sleepless nights? This really just sums it all up, doesn't it? The deadlines aren't going to move, the penalties are very real. The only thing you can actually control is how well you prepare. Having a solid plan isn't just a nice idea, it's absolutely essential. Now, we do need to say that all the information here is for general guidance. Your personal tax situation is unique, so please don't rely on this as your only source when making big financial decisions.
And that really is the key, isn't it? Especially in your first few years of business. Trying to guess your way through your taxes is a really risky game. Getting some professional advice can save you so much time, stress, and frankly, a lot of money by making sure you get it right from day one.
For that kind of expert help and peace of mind, the team at My Tax Accountant who helped us put this all together are there for you. You can give them a call on 020-570-8531 or drop them an email at info@mytaxaccountant.co.uk. And for more brilliant tips just like these, make sure you subscribe to their YouTube channel.
So we'll leave you with this final thought. Now that you've seen the whole calendar laid out, do you have a plan in place? Is your new business really ready for the financial rhythm of the tax year?